Good morning. It's the Wall Street Weekly Wrap Up, May 11th, 2024. And it was a slower earnings week, but we have some interesting moves, and let's take a look at it. Because we've got, right off the bat, ARM came out with their guidance and quarterly report, and it was good. I mean, look at revenues jumped 46%. Now, it went down because people were thinking, oh, it should have been up 60, 70. This is crazy. They guide revenues in line, but that's fine because they always kind of go conservative. But you're not going to get a tech company jumping 46%. This is the best so far. You have to think about they are doing well. They're going to get to $1 billion of sales pretty soon. They're in the Grace Hopper chips of NVIDIA. They're in the iPhones. This is a company you want to be in. This is a time to buy if you haven't been, you know, you missed it at 60. I mean, you've got a chance to get this thing a little bit cheaper. I think it's got great growth. It's going to be in the future. It's going to be in the chips. That's the most important thing. Taiwan Semiconductor. Look at January went up 7.9% in revenue increases. February, March, and of course April. This is parabolic jumps. It just jumped. You can see this stock in a downtrend because all techs are in the downtrend. And then they get over here, 146, boom, right out of the channel. So now we got the two best techs, and we own them. We own them. TSM and ARM. I mean, there are some big portfolio managers that don't have these. They might have NVIDIA, but they don't have these. And they're watching it, and this makes a difference on your performance. S&P almost up 5% for the last few months. It's going up pretty good. I mean, we went and ran. We ran and ran. And then it went down a little bit in April, went down. You had a chance to buy at the bottom of the channel. And then it's gone up again. So almost all the highs they were watching pretty close. And NASDAQ still a little bit slower than the S&P, but doing well. Doing well. The person who said we're going to get a crash of 25%, April 15th, sell and buy lower, came on yesterday and said, well, it went down 5%, and I would suggest you getting back in the market because the market's rallying. And you know what? You missed 20%. You were waiting for this thing to drop, and you didn't do it. Now you got to buy higher. What horrible advice, especially when he said he wasn't going to sell. You can't have that. Follow the people that do good. Forget the hype. The indicators, it's all about the metals. I mean, okay, crude's below 80. That's good for a lot of people. Remember, that's what we see at the pump. But natural gas still hanging above 2. It'll go down eventually. But because, we don't use it in the summer for heating. I mean, all our uses is going to be in the wintertime. Gold, wow, pow, 2,300. Silver, over 28. It was at 26 at the beginning of the week. Copper, 466. Wheat, coming up. The commodities are getting higher for a lot of them. And, again, gold people, I don't care what price is. Every year they tell you it's time to buy gold. So, just ignore those people. But how high is it going to go? I don't know. I could make a case for 3,000. We were buying at 1,600, 1,700, and, it's a solid asset. It's always, if you ever everything's completely collapsed like the Weimar Republic in Germany in the 20s, these are things you'd want to have some. So 5% should be gold and silver, and you can pick whatever proportion you feel comfortable with. Disney, not a bad earnings. It didn't lose money, which I always thought it would. And it kind of popped a little bit at getting anticipation, and when they put it out, it dropped below the trend line. So this is a bad report. A lot of people are thinking it would do a little bit better. Earnings are positive, so they're not losing money. It's just that they didn't do so good, and the streaming is okay. And there are a lot of people that was going to expect it to be up there like this. And so the streaming, other than Netflix, it's tough to be in that business. I mean, it really is. They make money on the theme parks. They're going to spend $60 billion and upgrade them and make them better. But the streaming wars are expensive. Disney only got the Wolverine and Deadpool movie this summer of any significance, and it's been tough. And I like I said, this is a stock we're not in, and Sometimes I don't know. People said, well, maybe if it gets down to 90 or 80, okay, you know. Uber we've always watched. You know, we had it at one time, a long time ago. I mean, like a few years ago, but lost at 32 cents. I mean, everybody was expecting like 22-cent profit, and they lost money. And they said, oh, well, we bottomed out in mid-April. Well, yeah, you can tell it's bottoming out. It's coming down like a rocket, and I don't know. I mean, are we ever going to get down to the November lows of 45? I don't think so. But they're doing well, and you know, and a lot of this is that Uber Eats is kind of dying off as people start to tighten the pocketbook. You know, paying somebody to $5 to $10 to deliver your meal, it's not doing so good. Lyft, on the other hand, did real well. All the utilities, you know, we have Southwest. Look at it; it's at the top. I mean, we're at the 52-week highs and stuff. Positive earnings. Revenues fell. All the utilities revenues fell. As we, you know, I was sitting, I must have looked at almost 30 utilities, and you know, there's a couple of them went up a couple percent, but Southwest, you know, it's in there, and it's doing good, and it makes money, and you know, we'll get a good dividend. So, but the utilities, I mean, it's been floating along, hit a bad part in October, and get a little bit of drop in April, and then it just parabolic like a tech stock. Everybody's making money. And you know, really what this is telling us is the money. Look at all these greens at the bottom. Everybody's starting to buy utilities as a defensive sector. You know, putting the money to work, and the stock's gone up, you know, since 63 to 73, almost 20%, 15%. It's not so bad. And of course, TKO, home of World Wrestling Entertainment and Ultimate Fighting. They settled $340 million suit for, you know, essentially trying to put other people out of business in UFC. That took their earnings to a loss. It would have been a positive. Revenues are out the wall. I mean, they're making money. I mean, they can charge a lot of money. You know, I mean, I don't want to pick on the UFC because I'm a big fan of it, but you should be having a UFC numbered event every month and a city event every month. There's no excuse to have three, you know, Apex things in a month and no numbered event. You know, that's just bad management. You know, that's you got the fighters, people will show up. You just have a couple good matches, and you know, I mean, I watch it all, so I don't, you know, I mean, I get people, oh, that's a bad card. It's like if it's good fights, it doesn't matter, you know. So they've got a lot of money. WEE is just ripping it. I mean, they've done great. So you know, it's a stock we're looking long term. This is got to be the most heartburn of all stocks. It drops, it jumps up, it drops, it goes up. Wow, just you have to think about long term. Revenues are up, people are buying it, they're licensing stuff, they're selling stuff. It's going to be big, and it's going to be bigger yet. And what you want to do is be in the stock. You know, is it the best time to buy? Well, no. You could say you could have bought it a couple of years when it was lower, but if you're looking long term, you know, 10 years, I can see it easily be, you know, not 10 years, but let's say 5 years, probably a $200 stock. And the heat map for the week, pretty well good. You know, I mean, everybody usually did good except if you had Tesla. He's firing people. He fired a whole charging division, which is absolutely nonsense because they wouldn't make the cuts good enough. He's lost the HR person, and you know, and of course he's, you know, fascinated with his social media X, and that's taking away time. You know, the best interview I ever did was he's talked about he's working 80 hours a week with SpaceX and Tesla and everything else, and then he bought X and he added another 4 hours. You're making bad decisions, and when you're tired, you make bad decisions. You know, the board just should either tell them you got to sell X and get out of this and concentrate on Tesla because it is losing share. 19% down in sales in China this month. You can't run it. He's going to take all that money and it's going to tank it, and I don't know if we'd even buy it back again at $100 because you know, he's got a lot of good ideas, but he's too spread out, and that's just a management issue. Other than that, good week, profitable week. Have a good week, and we'll talk to you later.